Traders, is gold about to crash? Because in the current week, gold rallied to all-time high and got a sudden rejection on the top. Now the question is, should we continue to hold our long positions or should we cash out and switch to sell? Because in the current week, we have two major announcements. First, we have RBI interest rate announcement on 30th of September and it is non-farm payroll week. So in today's video, I'm going to uncover the setup for dollar index, AUDJPY, Bitcoin, and yes, the favorite of all, gold. So let's begin our chart analysis with dollar index, and I'm starting on a 3-monthly frame here. I'll switch to line chart and I will explain the price pattern here. So here I'm going to apply fib retracement from the previous high to the lowest point, and we got the rally, and rally got stopped exactly in between 78.6 to 85.4, the strongest fib resistance area. So this is to be highlighted as resistance. And then I can see here a lower high pattern. So starting from the 85.4, we got the highest point and followed by a lower high. And now I can see that it is creating a sequence of lower lows and the environment is extremely bearish on the MACD histogram. So we can use this lower high pattern for marking the fib extension. Starting from the highest point, I'll connect with the first low and take it back to the lower high. So this is the first fib extension applied in the downward direction, and I need to move the vertical line here. And I can see here that dollar index hits a very strong magnet support area. So let's highlight with green, and the closest resistance is here. So the resistance falls in between 100 to 101.13. And switching to monthly chart now. Starting from the vertical line, it needs a minor adjustment. Now starting from the vertical line, I can see that I cannot apply extension here because we have A here, highest point defined, but the negative histogram is not yet done. It's not closed, though it's showing loss of momentum, but it has not changed the direction yet. So I cannot use it. I'll be switching to weekly now. Now starting from the weekly, I need to apply the extension or retracement depending on the market structure. So vertical line, yes, highest point defined with the highest histogram here. Then I get to see here a lowest point here, which is aligned with the negative histogram changed to positive. So currently we are in the retracement mode. So dollar index is retracing higher for the corrective pattern to be completed. So buyers, after hitting the magnet zone, support zone, they attempted the first rise here. They could not break the resistance at fib retracement 23.6, and in terms of number it is 99.76, but they reached to 14.6, pull down, and now again going higher. And the environment on the weekly frame here is positive under pullback correction, not a long-term reversal. That's it, and I can see here containing bullish divergence between the low points. So lower low formation with containing bullish divergence, which brings short-term correction, and it's going on at the moment. Now I'll be switching to daily here, and on the daily frame, if you notice, we got the double bottom formation here. So this is double bottom with bullish divergence, and based on bullish divergence, I need to mark the break of structure level. So the break of structure level is exactly on fib retracement 23.6, so 99.76. So buyers, they need to bring in money to break the structure and take it higher to the next resistance cluster, which is around 101.13. Now we have an alternative method. If the break of structure is not yet done, we can go with the aggressive confirmation in form of trend line. So the logic is we start the trend line from the highest point of the trend and we connect it diagonally with the BOS point. So let's apply the falling trend line here. So I'm connecting from the highest and passing through the BOS point. And yes, the buyers have given the early confirmation here, aggressive confirmation, because the falling trend line is compromised, and dollar index, it has risen sharply and breaking higher and breaking the trend line resistance here. So after this breakout, I can see here that this area is a cluster of resistance, and yes, it hits the resistance exactly. So we need some short-term pullback here. So from the current level, I'm expecting a short-term drop and then continuation high to complete the corrective pattern and take it to 99.76 with the expectation of continuation lower. So can we use fib retracement from low to high? Not on the daily frame. I need to switch to the 4-hourly chart. And yes, on the 4-hourly chart, I can see that it is still printing the pattern of higher highs and higher lows. And this higher high pattern on the 4-hourly frame, it aligns with MACD lines, but we have divergence on histogram. So if one of the two parameters, MACD histogram and MACD lines, if only one of those is diverging with the price, it means there will be a short-lived pullback and then continuation higher. So I'm expecting a short-term drop, and unfortunately I cannot apply a retracement here because the histogram has not yet changed. If you want to apply only on price action basis, feel free, you can connect from lowest to the highest. And I can say that dollar index remains short-term corrective bullish unless it holds higher than 78.6 to 85.4 fib retracement area. So in terms of levels, it is 97.02 to 97.11. So unless dollar index breaks below 97, there is no damage to the short-lived bullish corrective pattern. And strong resistance is between 14.6 to 23.6. So this is the local resistance and the local support, the nearest resistance and the nearest support. Now let's move down to 1-hourly frame. Now on the hourly frame, I can see here that buyers, they have continued to print higher high sequence, and I can see even on the last upward leg, there is no damage. I can see higher high pattern on MACD lines and almost on MACD histogram. So the current pullback is to be considered as short-lived and then continuation higher. So that's it. Dollar index in the short run, I'm expecting bullish behavior and it should complete the retracement, and in the long run, I'm expecting it to move lower. The next instrument is Bitcoin. So I would like to start on a 3-monthly frame here, and on the 3-monthly chart, I'll use candle chart here, and I'm gonna apply fib retracement only on the last completed 3-monthly candle. The current candle here, this is the latest candle. The current candle, 3-monthly candle, is not yet done because on 30th of September, the quarter would be completed and this candle would be completed. Otherwise, we cannot measure the incomplete candle. So we need to move backward to the previous candle. So now, starting from the highest shadow, connecting with the lowest, I'm using reverse fib retracement. And on the basis of reverse retracement tool, the first extension level is $126,647, and it reached almost to 126, missed by a few, you can say hundreds of dollars here, and the nearest support lies between 78.5 to 85.4. So we can say that the strong support is around 103 or 104 to 106, 500, and the resistance is 126, 647. And the environment on the 3-monthly chart is extremely bullish. Now I'll be switching to monthly frame here. Now on the monthly frame, I can see loss of bullish momentum, higher high sequence here. It comes with drop in the power of histogram. It has not yet changed to negative. MACD lines, they've started converging, which shows loss of momentum. But unless I see a break below 103,986, or in round number, we can say 104,000, I'm not expecting a deeper pullback. A deeper pullback should be anticipated only if it drops below 104,000 on a monthly closing basis. Otherwise, retest and continuation higher. Now let's move down to weekly chart. I'm switching back to line chart and moving to weekly chart now. Now on the weekly frame, I can see here loss of bullish momentum due to bearish divergence. So here we have higher high formation with bearish divergence on histogram and bearish divergence on MACD lines. So due to this bearish divergence, I'm expecting short-term correction here. So how do we measure correction? I just need to remove this measurement and I need to put fib retracement starting from the lowest of this leg to the highest. So I'm going to apply fib retracement one more time. Now I'll start from the lowest and I'll move to the highest. So currently I can see that Bitcoin is getting weaker because it has printed a lower high pattern here on the weekly frame, and current price is lower than fib retracement 23.6. So 23.6 level is 109955, or in round numbers we can say 110,000, and the current price is slightly lower. If it continues lower, there is a probability of hitting 103, and 103 is again 38.2, which coincides with the reverse fib level taken on the previous chart. And if I see a break below 104, then we can expect a deeper pullback towards 94, or worst case scenario it can go back towards 87, 84, and then continuation higher. The environment has changed to corrective here. It's not trending higher due to bearish divergence and histogram is negative. But keep in mind that MACD lines, they have not yet breached the zero level. So this drop is to be considered as corrective drop. So now I can see a very strong resistance in between 109 to 113, or 110 to 113, 708. So I've highlighted this area with red as resistance. The closest support is at 104. In case 104 gets breached on a weekly or daily closing basis, then we can expect a deeper pullback towards 98,900, 99,000 mark, 94,000, and worst case scenario towards 84 to 87,000. So I need to highlight this as support. Now let's move down to daily chart. Now on the daily frame, I can see here higher high pattern with bearish divergence. So daily higher high identified with a very strong bearish divergence on histogram and MACD lines, and the sellers, they have completed the breakout structure, and after breakout structure I can see a pullback with a lower high completed. So it gives me the choice to apply fib extension in the downward direction. So on the daily frame, I'm connecting from high to low and connecting it back to the lower high. And since it's bearish, I need red lines here. So the first level is 107. We are almost there. In case it drops below 107, then we can expect 101, 904. In round numbers, we can say 102,000 mark, followed by 92,300. And worst case scenario, again, it coincides. So it brings magnet here at 86,500 and then continuation higher. So short-lived bearish correction highly anticipated in Bitcoin, and it should move down to 102. First it needs to break below 104, then 102. If it breaks 102, then it will quickly move down to 92,300, followed by 86,500. 4-hourly chart. Now on the 4-hourly chart, I can see the sequence of lower highs. Again, it comes with bearish divergence on the top. So higher high formation identified with bearish divergence. And after bearish divergence, I can see breakout structure and printing of lower highs. So last two lows, they have formed bullish divergence on the histogram, but not on MACD lines. What does it mean? A short-lived pullback and continuation lower. So daily chart and 4-hourly chart, they are confirming the bearish price action. But due to higher time frame being bullish, I'll take it as an opportunity to buy. I'm not interested in shorting Bitcoin. In fact, I'll be buying on the dips and I will hold it for the long-term plan. And the higher levels, the first target is 126,700. And once it breaches 126,700, I can go back to the 3-monthly candle and I'll give you the next target higher. So I did not mark it, so let me just do it here. So 3-monthly candle on the reverse fib basis, the first target is 126,900. And once it breaches 126,900, then the next target would be 135,854. So short-term dip to be taken as an opportunity to buy and accumulate your positions for the longer term, the bullish plan. Now I'm switching to AUDJPY, and I'll start on the monthly frame here on line chart basis. Now taking the view on the monthly frame, I can see here that the lowest point is here. So this is the lowest point, which comes with bullish divergence and the break of structure. So it gives me the opportunity to apply first fib extension in the bullish direction. So we'll start from the lowest, apply our first extension, and done. Now it's time to bring your vertical line on point C and look for the next cycle. So we can zoom in here, and I will apply my next extension here. So second fib extension in the bullish direction applied, and I get to see here a very strong magnet zone on the top and a very strong support area here at the bottom. It's a very wide zone. We need to move down to lower time frame to basically look for a tighter magnet zone here. Now I can identify in this upward move loss of momentum with higher high pattern and MACD histogram bearish divergence. Now due to bearish divergence, I need to mark here the breakout structure level. Done. Let me change the line here. So I'll pick my horizontal ray, and breakout structure is here at 88.61, which is not yet done. If the breakout structure is not done, the alternative form of validation is trend line. So I'll connect the trend line from the low to the breakout structure point. And yes, the sellers, they have completed the break of trend line, rising trend line compromised. It enters into the magnet support zone and bounces back. So now we need to apply fib retracement on the monthly frame, starting from the highest to the recent low. And we can switch to weekly now. Now on the weekly frame, I can see here that we have measured the move on fib retracement from highest to the lowest, and it ends with bullish divergence on histogram, but not on MACD lines, because MACD lines are creating a pattern of low and lower low. So it means short-lived pullback, highly anticipated, and then continuation lower. Now on the weekly frame, if you notice that our bullish histogram is showing exhaustion, so I can see here higher high sequence with exhaustion on the histogram. That's it. I'll bring the vertical line on the lowest point and look for the completion of bullish cycle here. Now I'll move down to daily here. Now on the daily frame, I can see here that the higher high pattern comes with bearish divergence on MACD lines. Histogram changes to negative, and maybe after announcement on 30th of September, we might see sellers coming back. Now based on higher high pattern and divergence, I need to pick the breakout structure, and this is the breakout structure level. Now again, I can see divergence only on MACD lines but not on histogram, so which means short-lived pullback and then continuation higher. So can we apply fib retracement here? We can use the latest bullish divergence formation, break of structure, and starting from the lowest point only on the latest up leg, I can apply here fib retracement. So let's apply, and I can see that sellers from the top, they have pushed the price exactly to the magnet support. This is the confluence of fib retracement 23.6 and the fib retracement line taken on the higher time frame, and we got the bounce here, and after the bounce I'm expecting the continuation lower. Let's move on to 4-hourly frame. Now on the 4-hourly frame, I can see here that this is the first move down, corrective move up, and again sellers have entered into the market. So I'll be using now retracement only on the 4-hourly downward leg here. 4-hourly downward leg identified, and usually we find that retracement ends between 78 to 85, and exactly between 78 to 85 I can see the end of buyers and lower high sequence after that. So we can highlight this area as our nearest resistance area. Done. And now I'll be using my Fib extension from the highest to the first low and from low to lower high. So I get to see a very strong magnet confluence around this area. So this is 97.5. Currently we are at 97.82. Is this correct? Yes. So here we go. And I can see the last 4-hourly candle is a bearish candle here. And the environment is totally bearish. Now moving down to 1-hourly frame. Now on the 1-hourly frame, I can see here that buyers are done. They're exhausted. I can see higher high formation with bearish divergence. And the sellers have completed the breakout structure. So first push, could not break, lower high printed. Next attempt, successful, again lower high printed. And I'm expecting continuation lower. So how do we approach? So we can look for selling opportunity, short position at the current level with the stop loss higher than 98.15, the magnet area. Moving to the higher time frame and looking for the next magnet around 1.61 or slightly deeper towards 96.07, and my risk and reward is 3.78. If I go to the first target, again it's conservative, it's 1.5, but still decent, and this is how I'm anticipating short-lived bearish price action, especially after the announcement on 30th. And then in the medium run, I'll be switching to buys again, maybe from the first magnet or from the next magnet zone in case if we get to see a deeper pullback. But short-term plan is definitely bearish. Now it's time to start with gold, and I'm on the monthly frame. I'll be switching to 6 monthly frame here, and I'm using candles chart here. Now the momentum on the 6 monthly frame is extremely bullish. The price pattern is extremely bullish. Previous high, and this is the new high, higher high sequence of MACD lines, and higher high sequence of MACD histogram without any drop in the momentum. So instead of using Fib extension, I'll be using Fib retracement only on the last completed candle. Now each candle is showing 6 months price recording here. So the current candle would be completed on 31st of December. I cannot work on this. I need to go to the second last candle. I'll connect Fib retracement in the reverse direction from highest to the lowest of the candle. And if you notice, I get to see here the extension levels in the reverse order. So the first extension is 138.2 and the second extension level is 161.8. And the current 6 monthly candle has formed a base exactly in between 78.6 to 85.4 of the retracement level. So this is now our long-term support, which is 3309 to 3370. We have an important level at 100% mark, which is 3501. To round it off, we can say 3500. And the next target, which should be completed by the ongoing 6 monthly candle, is 3843 to 4055. We are very close to 3843, but 4055 most likely should be done by end of December or maybe prior to that. So in the coming 6 months. Now I'll be switching to 3 monthly frame. Now on the 3 monthly frame, again, the environment is extremely bullish. I can see rising histogram with a huge gap between MACD lines and no convergence. So the buyers, they have maintained their control on the 3 monthly frame as well. Now I will remove, okay, we can mark the resistance, the first extension level at 3843. So this is the immediate nearest target, followed by 4055. Now I'll remove this and I'll apply the new Fib retracement on 3 monthly chart now. Now on the 3 monthly chart, The current candle would be closed on 30th of September, which is not yet done. So again, I'll be working on the previous candle with the same technique. And yes, when I apply Fib retracement in the reverse order, I can see 38.33 is the confluence level. So this gets reinforced. So our target is 38.33 and 37.05 is 138.2% reverse target with a very strong base around 33.82 to 34.10 here. So this area gets reinforced as support. Done. And 3498 means 3500 is the closest support. I'm just changing the color here to red as our target, and the stronger target is here at 38.33. So 38.33 is highly possible. Now I'll be switching to monthly frame here. So 6 monthly extremely bullish, 3 monthly extremely bullish, and now I'm coming down to the monthly chart. Even on the monthly chart, I do not see any signs against. I can see rising pattern here, MACD rising, MACD lines clearly rising. So no loss of momentum. Now I will use Fib extension on the monthly frame here. I can start from the low of 2022 and I can move back to the line chart. Sorry, this is not giving me the complete cycle. I will start from the low of 2015 here. So this is the low of 2015 connecting with the first high and the higher low here. I can see 3488 to 3500 is reinforced as our Fib zone. So this is the magnet support zone. And 4055 to 4065 is reinforced as the next target, and the closest target is 3833, and there is no damage to the bullish pattern. I'll use the vertical line here and move down to the next lower time frame, that is weekly. Now even on the weekly chart, there is no damage to the bullish pattern. MACD lines clearly rising, histogram is also clearly rising here. So starting from 6 monthly, 3 monthly, monthly and weekly, all higher time frames are extremely bullish. Now I'm switching to daily, and on the daily frame, I will work only on the price action around this highlighted magnet support area. So I need to pick the extension from this area. So here I can go with the low here and the high and connect with the higher low. And I'll change the Fib line to green here. Now based on the extension applied, 3789 is the exact 200% target and 3690 is the previous 161 target. So this can be highlighted as magnet support. So starting from 3690 to 3705 is the nearest strong support area, and the closest resistance is 3789. Switching back to candles, and if you notice in the current week, gold rallied precisely to this level. 3791 was the highest price and the extension level is 3789.92. $1 or $2 here and there, but it is exactly the same level, and it is still creating the pattern of higher highs. So we have double top here and we have double bottom. So this range was broken. This was the consolidation range, and I can see here the sequence of higher highs. I do not see divergence here, only slowdown on the histogram basis containing divergence. MACD lines, they started converging. It means the buyers are exhausted, but the divergence is possible, probable, but not yet there. So we cannot assume divergence unless it is visible on the chart. Now moving my vertical line to the low here. Now this is your first move up, corrective move down, and the next rally comes exactly with the Fib magnet resistance, a shallow pullback and breakout higher. Now we can measure our breakout on Fib retracement here. So I'll be zooming in and starting from the low of 3643 to the recent high on the line chart basis. I'm using Fib retracement here. applied. So if you see that the strong area, which is 14.6 to 23.6, still acting as support, and the deepest level here is 3668 to 3660 highlighted. That's it. We can remove the tool now. And now we can switch to 4-hourly chart. Now on the 4-hourly chart, we have measured this leg up rally. We got almost double top scenario here, but there is no confirmation of divergence. I could see a drop towards the major support zone calculated on Feb retracement and the rise again. So now I'll be using a reverse Feb only on the latest 4-hourly leg down. So 3777 to 3774 is now acting as strong resistance. This is the strongest resistance point, and I can see reinforcement of support at 3745 to 3740. So we need a break below 3745 to 3740 for the deeper retest. So only if on 4-hourly basis, if I see a convincing break below 3740, then I will think that buyers are in short-term trouble for a deeper pullback, which may take it towards 3690 or 3705 and then continuation higher. So we have two probabilities in the current week: either prior to the NFP day, which is on Friday, 3rd of October, we can see continuation in the rally, and if the numbers are in favor of dollar, then we can see prior to the NFP day 3805 or 3817 and ultimately 3833 to be done, completed as the target, and then we can see a pullback towards 3690. Alternatively, we may see a sideways price action prior to NFP, and if the numbers are not in favor of USD, then a shoot and a break above 3789 with the first target at 3805 followed by 3817 and ultimately 3833. And the third possibility, in case if we see a real good number for US dollar and gold comes under pressure, then we can see a break of 3690. Only if we see a break of 3690, then I can expect it to reach to the next level of 3662. I'm not expecting a deeper pullback. I'm not expecting a retracement below 3660 unless we see 3745 or 3740 being broken followed by 3690. So my plan is to buy on the dip towards 3740 and hold for the target of 3805, eventually 3833. And in the longer run, in the coming quarter, starting from October till December, I'm confident that gold will hit 3950, followed by 4065 or 4055. I hope my today's video was helpful. If you like my content, give me a thumbs up, subscribe to my channel, stay sharp and trade smart. I'll see you next week.